Vincenzo's Gold Crypto Investing is September the 28th. I gave you the wrong date yesterday. 2025, noontime pre-Lions game, gold and silver bullion, cryptocurrency, and Ask That Millionaire update here at Vincenzo's Gold Crypto Investing. And as we expected this weekend, there really wasn't that much activity. And we'll start actually with the XRP price. We weren't expecting a lot of activity this weekend, and we have not gotten a lot of activity this weekend, as we're at a very critical point in the cryptocurrency short to medium term market, as we could be seeing a cyclical several month fall bear market like we've seen the past several years, and we'll get into that this week. But you can see the XRP price right now, we're trading below two critical moving averages, which is the 50-day and the 100-day moving average. We're just below the 100-day moving average right now, and 50-day moving average is starting to trend down right there. You can see that slightly trending down, and there's your current price in the white line. I expect the next big move to come to the 200-day moving average. Could it come up to the 50-day moving average in the short term? Yes, but I expect the next big move is going to be down to the 50-day moving average, and then we're going to come along and hit this. We got to make this a brighter yellow. Right there in yellow, that $2.55, which is a pattern support, which is the area that we're looking at. If you break through that, you're going to come down to the 213, and that 213 is the weekly time frame 50-day moving average in an area that was major support and resistance for about 7 months, coming off that high back there after the Donald Trump election in December and January, where we were topping out, and we were the only cryptocurrency site calling for a bear market from the what that hit there, the $3 and all the way up there, the $3.41, 42 cent. We had a $1.29 target, and we got as low from there as $1.60 on a wick, right? $1.62, right down there before we had the big turnaround for about 2.5 months leading into the mid to late July into early August top, right? So we were on top of that. We told you there'd be a better buying opportunity if you never bought in, and that's part of the truth and trust that we're built on in the education, that if you didn't buy during the 2-year bear market, this was not the time to buy. It was not the time to buy to rush in all up in here when the price went from 35 to 50 cents all the way over $3. That wasn't the time to buy, and we were emphasizing, even if we didn't come down in the medium term down to the $1.28, there would be a better buying opportunity. And you had about 5 months straight of beautiful buying opportunities. Was it as good as sub-dollar? No. But was it way better than $3 plus? Absolutely. From the high, you had multiple chances to buy it down 43 to 50% off that peak high, which one gives you less stress when you buy it when it's 50% off its recent run, and you're not buying it when it's 7x up over 5 months and it's sitting at 340. That's high stress, right? Because there's high risk that it's going to have a short-term, at the bare minimum, downturn, right? But if you buy it after it went down 50% from when it went from 340 down sub $2, and you're buying it at $1.80, $1.90, and you've never bought it before, makes it a lot less stressful in the short to medium term, because you're likely to have some kind of a bounce back, and you're not buying a regional high, you're buying a regional low. Even if a year from now it looks like a bad buy because it gets below your $1.80 or $1.70 or $1.90 buy, it's still way better than buying it on the euphoric blow-off top, right? So that's what we were trying to stress there, and that's something we've been stressing with the XRP, which is the focal point of this video. After the Lions game, we'll get more into the altcoin, and that's why we're stressing now. We have a potential where we're double-topping over the macro time frame over the last year, where we had one high back in the winter, then we had a pretty significant 55 to almost 60% bear market, followed by this brief new high here set at 366 or 22, 23 cents higher than the previous high back in December and January. But we're losing volume drastically like we always are in crypto. And it looks like we're turning into a period of downturn in crypto, which is a seasonal flip to bearishness in the fall. I've noticed fall and spring seem to be bearish for crypto. In winter and summer seem to be very bullish for crypto and seasonal cycling that I've noticed over the last 10 or so years following crypto. And this would make sense now that we peaked out at the end of summer. You can see going into end of July and August, And since then, August, we started to trend down. September, we've continued to trend down. And then you go into October and you flush out and bottom out around Halloween. And then you start digging out of it going into the early November, going into the holiday. And then you start pumping from about just before Thanksgiving through the New Year, the beginning of November through the end of December, Christmas, and then you top out again, right? So that's going to be something that we're paying attention, because we could be making a run at for the first time in about a year by the time we get down there. The 50-day move, the 100-day moving average in the weekly time frame, and potentially the 200-day moving average in the weekly time frame, something that hasn't been hit since the November election of 2024 when Donald Trump won. So these are all things that I'm watching out for in the short to medium term. These are all things that's right, I'm looking at you right now, my Jabroni Killer members, my audience members, and the beautiful people around the world that listen in the social media and YouTube internet sphere, right? So that's what we're looking there in the XRP in the short term. We'll look at XLM real quick. XLM is in very similar state as the XRP. The moving averages are trending down just like the XRP. The price is in a very similar pattern as XRP, and I'm going to think, and I'm going to continue to believe it's going to follow very similar to the XRP. And if it does, you can see we're struggling just above now the 36 cents, or the top part of this green support and resistance box just below the 100-day moving average, which is just below the 50-day moving average. And if I was watching out on this, what we're watching out for in the XLM is, do you slip the 36 cents, which I believe you're going to. And if you do, the same call that we had back when you wicked down back in August and touched it, and then you full body came back down in September and had a slight bounce. We said when you get rejected, because we were thinking it would, and you come back down to this 36 cents, it's not going to be able to hold it. And you can see the immediate short term the last few days, it wicked below it, got supported on the buys with the buy orders in there, wicked above, just above the 200-day moving average. And what's happening right now is if you slip back below that, you're going to initially and immediately come back to the 200-day moving average. And then you're going to more than likely slip that and end up at the 31 cents, which is just above the weekly time frame moving average in the 50-day, right? And we have not hit that since we blew up past it again in July. And then you can see the 100-day in the weekly and the 200-day in the weekly. But I do believe we're coming down to 31 cents in the immediate short term. If we look at the Ethereum price, you can see we slipped the megaphone neckline support, which is resistance now. And I believe if you can't get back above that, you slip the 100-day moving average, something we've been talking about since you were up there topping out. If it did go bearish, your next move down is the 200-day moving average in this critical underneath support at 34.82. And then if you break that at 3,063.50, it's very plausible if you want to not have that happen. And we'll get deeper into this tonight, along with some of the breaking news that happened. You got to get back on top of this megaphone neckline support and move to the upside. And we're going to end out with the Bitcoin. You can see the Bitcoin is still trying to confirm if this is going to be a targeted confirmed breakdown out of this 3.5+ year rising channel pattern support that we've been in, which would be a structural change of the market and pattern of Bitcoin and crypto, and have some catastrophic and feedback effects on things like MicroStrategies, which is down big, which if the price of Bitcoin slips about 95,000, that brings them very close to breaking even on billions of dollars worth of borrowed money and mortgaging their stock and praying that Bitcoin never has a big enough or long enough bear market, because they're buying up their average cost. And that would be a feedback, because it would force some of these lenders to sell, which would drive the price down quicker and deeper, which would force more and more of these quasi-Bitcoin treasuries that are on leverage, that are mortgaging the futures of their company, all on Bitcoin going up and never going down. It would trigger more sells, would call more liquidations, and notes could be called, which would drive the price down faster and have a feedback effect and continue to dump the price. And if this is a confirmed breakdown over the next 3 weeks, 4 weeks, we're going to have to look at the 200-day moving average, but then the 95,000 would be hit. Then you'd be looking at the 79,000 and change, and potentially with a structural breakdown of the pattern, a technical target is down at $27,000 if this went extremely worst-case scenario for Bitcoin, which would be the bottom of the channel, which the bottom of the channel would be a targeted move if you break down out of this, right? And you can see the $61,000. We have levels on this on the way of major underneath support, and this almost looks like our turtle bullish continuation pattern, but bearish reversal pattern, where you have the shell, Then you have this long neck there, which looks like a conveyor belt, and then it dumps out at the end, right? And that's what could be happening here, and that's what we're paying attention for in the short and medium term here, going in the next 3 to 4 months to see exactly what happens, because it's very, very critical. Peace and love. And a question a Jabroni Killer member had: if DGB continues to go down and AMP, where do you buy? Well, your next area to buy is all the lows. So if you want to keep accumulating, this 0.00561 is your golden accumulation zone, because that's its record low, right? Right now it's not a bad accumulation zone because it's not up here at resistance. It's closer to support. So the closer you are to this 0.00561, go ahead and buy. I'm not a financial advisor. If it breaks that and goes into price discovery the wrong way and ends up way down here, obviously if you believe in it continuously, you buy more. But right now you would target the 0.00561. I didn't want to forget about this. Not a financial advisor. These are just support resistance zones. And the same thing down here. If it slips this critical 2-year plus support, your next area that you would look to buy is if you came down here, because that's like about a 30% below the major support, and the next level to the downside. Like, subscribe, and share. Peace and love. The Rock Eyebrow, Jay.